us via SMS or WhatsApp at 8855-0893. But please send the message through only when you are safely parked. The Hot Seat.
Welcome to the Hot Seat, a debate segment where ideas clash and insights spark. I'm your host, Hongbin Jeong. Now, imagine this. If all our local food places were shut down one by one because of high rent, where are Singaporeans going to enjoy a meal outside of home? It's not just about losing our favorite hawker stalls, cafes, or family-run eateries, but about losing the heartbeat of daily life. Food in Singapore isn't just about eating, it's culture, comfort, and connection. So when rising rents start pushing F&B businesses out, it becomes a genuine concern. Yet some say that the increasing rents are part of a healthy, growing economy because it reflects demand, drives property development, and rewards landlords and investors. And that's why we'll be discussing whether raising rental prices, even for F&B businesses, is essential for economic growth. Now, before we hear from our guests and dive deeper into this debate, here's a disclaimer. The views and arguments presented by our interviewees do not necessarily reflect their personal beliefs or opinions. Instead, they are here to provide a fresh perspective on the topic at hand. On that note, if you'd like to send some questions in for our guests, feel free to WhatsApp us at 88550893 or leave a comment on our Facebook, LinkedIn, and YouTube, as we're currently streaming live on there as well. So without further ado, here are our guests. Joining us today is Fabian Lim, who is the co-owner of Meepok, JOFA Grill, and JOFA-Oji Donburi, to share with us the reasons behind why raising rental prices do not necessarily contribute to economic growth. We also have Zoey T, who is a senior associate director at PropNex, who will try to convince us otherwise. Welcome to the show, both.
Hello.
Hello. Thank you so much
for having us today.
Thank you so much for joining us. All right, maybe we can start off with Fabian. Fabian, you co-own JOFA Meepok, JOFA Grill, and JOFA-Oji Donburi. Have you seen rental prices increase for your F&B businesses? If so, and if you don't mind me asking, by how much?
Yes, it's real. Definitely in this sector, right? Especially when there's like a change in ownership or renovations, you expect a rise in rental rates. So for my personal experience, right, it ranges between like $2,000 to $5,000.
Okay, wow, $2,000 to $5,000. That's a lot. But do you think that such increases are sustainable for your businesses?
Definitely, it will only be sustainable if you increase your food prices as well.
Okay.
It's like a balance.
Makes sense. Well, Zoe, for some context here, to what extent are rising rental prices truly driven by broader economic growth?
I would say that it is as justified as, how having a free market economy helps with Singapore's economy in general. So for context, rising rental prices are currently as such because it's purely driven by market forces. You have your supply and demand, and the government does not actually step in too much to artificially set these prices. And so I think my answer is it's helpful. I mean, it does have its pros and cons, but that's the free market economy that Singapore's government deems fit for us as of now.
All right. Well, Zoe, but is it justified to apply the same rental hike prices to F&B businesses as to, luxury retail or office spaces, considering the essential nature of food services for everyday life?
Obviously, I think not, because as you've mentioned, food is not just, it's a need, yes, but it's also a culture for Singapore. I'm a huge foodie myself. But at the same time, we also got to take a step back and look at the bigger picture on how to effectively manage an economy so that Singapore remains prosperous and also attractive to foreign investors. So rising rental rates, they make it attractive for people to still invest in real estate. And these are also where the government gets taxes, we get like income in that sense to help to kind of recirculate in the market. And we have funds to like continue making Singapore like a better place for all the Singaporeans.
I see. Yeah. Well, with rising rents forcing F&B businesses to close or even raise prices of food significant, as a F&B business owner yourself, Fabian, do you think this impacts food security and affordability for Singaporeans?
Yes, I do agree that it definitely impacts it, especially to the lower to middle income consumers. As much as we F&B businesses try to keep our prices as affordable as possible, right? we have to gradually increase them as well in order to keep up with the rising rents.
Right, right. I mean, just recently, cake shop floor patisserie faced a staggering 57% rental hike, which amounts to $8,500 from the current $5,400. I'm sure a lot of people seen that news. Now, this sparked outcry on social media about the reality of Singapore's current rental market. The landlord, though, had justified the latest $8,500 rent by citing rising mortgage rates and that the rental market had gone up significantly. But Zoe, is this justifiable? Is this a new rental reality that we live in now?
I would say it is justified to a certain extent. Of course, we don't want to see such exorbitant rental rates, to be like rampant, to be running rampant. And we don't want these landlords to be overly greedy and set prices that just cannot be stomached by, by the tenants. But at the same time, there is also a flip side on how these tenants are not forced to say yes to, the rental prices that the landlords quote.
Okay.
There are avenues where they can look for like other alternatives they can move to. So I think having a choice, tenants they still have a choice. Let's just put it that way. They still have a choice to say no to these landlords, walk away if the rents just simply don't make sense, if the numbers don't make sense to their business models. Yeah.
Okay. But, if landlords are simply passing their financial burdens to tenants, is this still a healthy sign of economic growth here, or are we just shifting risk onto small businesses in the name of market efficiency, Zoe?
I would say for now, functioning as a free market economy, we don't want the government to be stepping in too aggressively to be setting these prices or overprotecting, let's say, either sides. As I've mentioned, if you're a tenant, you get hit with, let's say, a 50% increment, and then you look at your numbers in-house and you think, okay, revenues-wise, I just can't afford this rent. I would say currently in the market, there are alternatives. There are spaces that are going for cheaper and things like that. So in that sense, there are still choices, and therefore, like, I stand firm in my stance of it's still justifiable for now.
Okay.
But moving forward, maybe the government has to be a little bit more alert as to, observing if there are any overheating trends in be it rental or even purchases in the commercial space. Yeah, as they do with the residential side of real estate.
Makes sense. Well, now, Ms. Heidi Tan, who is the owner of Floor Patisserie, acknowledged that the quiet enclave of private homes nearby does not get high foot traffic and is a distance from the nearest MRT station. So, Fabian, if that's the case, then isn't high rental rates simply a reflection of demand and value? Or in this instance, the lack of demand? Isn't the business risk here tied to the choice of location and unreasonable to expect landlords to absorb that risk when market rates rises?
I do agree to a certain extent. Hotspots would generally mean that there will be a higher footfall of consumers around that area. And then hence landlords will be able to propose a higher rent. So partially of the business risk definitely plays a part, which is the location as well. So small business like us, we need to be able to stomach. We need to do our own market research and see if revenues-wise, is it feasible or not? Yeah, and I would find it more reasonable if like landlords can gradually put it balance like a 5% or 10% increase over the years. Yeah, so it's more like a fair play.
All right, makes sense. Well, according to ST here, the rising rents in Siglap Drive, where Floor Patisserie is located, could be attributed to investors buying the shop houses at high prices and then raising rents so that they can reap investment returns. So, Zoe, isn't it fundamentally unfair here and perhaps even economically short-sighted for landlords to demand ever-rising rents from the very F&B businesses that make their properties vibrant and desirable in the first place?
Yeah, I would say a little bit, but at the same time, as Fabian here mentioned, that sometimes it's kind of like a two-way street. Tenants find for instance, Unit X, at Siglap or at Orchard, for instance, the location is good. We bounce off each other. There has to be like a dynamic, I feel. In an ideal world, it would be nice if the landlord and tenant can work hand in hand to make the place even more prosperous, increase footfall together. Like we rely on each other. So the landlords, they got the location, they got the ownership, they got the strata title, whereas the tenants, they bring, like the personality,
Right.
you're taking like the culture, the nice food that, if you do things hand in hand, I'd say it can be a very nice, a very nice outcome.
I mean, if rental prices continue to, rise, doesn't excessive rental pressure stifle innovation by, forcing out experimental or even niche F&B concepts that can't afford prime locations?
My question would then be, do niche F&B concepts actually really require a prime location? How dependent is their success on just a prime location? I feel like there are many factors to consider when having to, run a successful, niche business, regardless in any field. And that is why it's also even more respectful when concepts like this take off. And it's so heartwarming to have success stories from Singapore,
Right.
like Beyond the Vines, out of just F&B. So, I don't necessarily think excessive rental pressures will stifle innovation completely, but it may indirectly, we may lose out on some good eggs here and there.
But I mean, with our social media and everything, if it is a very niche experimental F&B business and people want to try it out, they will go, across the island just to
And
check
in
it out,
fact,
right?
There are home businesses. There is the rising trend of home businesses where they just operate from home. And I've visited a few myself, just to support the small businesses. It's really nice, but when I have a look at their prices, they're actually very similar to just the cafe prices. So you then ask yourself, are prices as such because of raw materials instead of just purely rental? Because these places are completely not paying for
Right.
rental, and they still have the footfall. Yeah.
Okay. Well, Fabian, don't you think that increasing rents forces businesses to innovate or improve productivity, in the other hand, which ultimately contributes to stronger economic growth? How do you respond to the argument that rent hikes can drive positive change rather than just hardship?
Yes, I do think that younger gen hawkers like us can always improvise, innovate new products, and develop SOP, streamline operations to improve productivity in a way. But for the older gen hawkers, right, to them it poses as a challenge to them. It's kind of very difficult. Like the older gen char kway teow uncle, maybe he can only fry that amount, X amount
Right.
in that period of time. So it's definitely a challenge to them. And to me, right, economic growth is more fundamentally tied to other sectors such as finance, production, and etc. So for us, F&B sector, right, it could have a negative impact. So for say such as the closure of business, and it hinders expansion as well.
Okay.
Yeah, so a balance is definitely needed, so that the rising rents will not hurt the consumers' spending. Yeah, which is also a crucial part of economic growth.
Right, some great perspective there from you as well, Fabian. Well, according to an article from the World Economic Forum, a big push on investments and innovation requires credible and supportive policy and governance that can create confidence in future returns. Additionally, the Singapore government introduced the Code of Conduct for leasing of retail premises in order to ensure fair and balanced leasing agreements, which took effect from the 1st of February in 2024. So, Zoe, how do you justify the increments as fair and balanced that can build investor confidence if the business environment on the ground, especially for F&B businesses, is becoming unaffordable in a way and unsustainable? I mean, the businesses at Siglap Drive only has or have seen 3 tenants close down there since 2024, with another 2 to follow suit before the end of this year.
Okay, so to give a bit of context, there are a few types of landlords in Singapore. So you have your big guys, your big corporations, the REITs. These are usually your malls, like for instance, Ion Orchard. They are operated by REITs, and how they price their rentals, I would say, they have a full kind of like a retail strategy. They know what tenant mix to bring in so that they have a strategy on like how to drive the crowd. They manage the mall in a certain way, and therefore this is how they justify their increments, because they provide a value for the tenants that they invite on board. So that's one type of landlord. The other type of landlord would be your strata landlord. So these are your like could be you and me,
Yeah.
we can buy a shop house and we can just price according to, how I like. If I'm greedy, I can just skyrocket it, but I would also be risking vacancy loss. So I think the market itself kind of makes it, it kind of allows you to play with like a bandwidth of what is too much and what is fair. Of course, you don't want it to be too low. I think probably a good gauge would be somewhere around, like for instance, let me take, for example, Sweden. They actually do have, I think it's kind of like a law where you can only increase your rents as a landlord pegged to maybe like an index that is relative to the interest rates, that the country has. So that may be a good way to, just regulate and make sure it's fair and not exorbitant. And also maybe just have, like timely reminders to tenants that if your landlords are charging you way above, the market average, which you can check online, say no, like move away. You have options. Yeah.
Right. Well, still, Singapore is not the only example in which excessive rental price increase is taking place. Places such as New York City, Tokyo, or Hong Kong, those are some instances where such things are taking place. Yet they still remain top economic powerhouses for businesses big and small. So, Fabian, I mean, there are still F&B businesses that are still surviving through such rent increases. So, isn't it possible that the reason behind such businesses is because that they are unable to keep up with the current situation and is likely because of the weak business fundamentals rather than an unjust system?
Well, surviving isn't a state that any business will actually want to be in. So, but if rising rents will equate to increased food prices, when customers are not receptive of it, it will lead to very bad consequences for the business. Yeah, and it's more than just having good fundamentals in the business. It's more than that. So, like I mentioned, like rising rents, right? How should I say it?
They
I think I made the point.
Okay. Makes sense. I mean, it seems like it's not rising rentals are not the only reason or is not the only fundamental that makes it an unjust system here. Well, in the past, Singapore had a law called Control of Rent Act, which was repealed back in 2001, I believe. According to a website called Singapore Statutes Online, it was a law that was made in the 1950s, which aimed to control the rent levels for premises occupied before a specified cutoff date. Now, this applied to private residential tenants and commercial tenants, including shops, offices, and small businesses. So to wrap up our debate here, for both of you, I would like to ask, should we be looking at reintroducing or updating policies like the Control of Rent Act to protect small businesses, or would that risk distorting the current free market economy? Zoey, would you like to start off?
I would say for now, probably too soon for the government to intervene so heavily, because it's a free market economy. At the end of the day, you want the government intervention to be limited, and you want the market to just do its thing. And I feel like as of now, there are other schemes that the government, or things that the government is doing to ensure that the tenants are also, or small business owners, are getting supports that they need. So, for instance, if I'm not wrong, there's this enhanced entrepreneurial grant thing going on, and there are a few grants out there that allow you to kind of claim for costs that you incur from setting up a business. This could be to buy your equipment, which is also not cheap. These grants are also in place to kind of just ease the financial load of the tenants, and also to encourage them, because as you mentioned, it's so important to support our local businesses, and you don't want you don't want these businesses to die down at the end of the day. So for now, I don't think government intervention should be too much still, but of course we can't be complacent. We always gotta, just adapt and overcome accordingly. That's why the government really has to step in with policies from multiple approaches, not just just controlling rents and stuff.
Right. Well, Fabian, earlier in our conversation, you mentioned that maybe the government could impose like a cap on rental hikes here. So should the government intervene to protect F&B businesses from these steep rental hikes?
I hope that they could propose some certain guidelines that maybe influence the landlords and the tenants to work together with each other to, like she mentioned earlier,
Yes, yeah.
to increase the footfall and the popularity of the place. Yeah, it works out for everyone then.
All right. Well, thank you so much both for joining me today.
Thank
Thank
you
you.
for having
Thank
us.
you. That was Fabian Lim, co-owner of JOFA Meepok, JOFA Grill, and JOFA-Oji Donburi, and Zoey T, who's a senior associate director at PropNex. Thank you to all those who tuned in on our social media platforms and on air as well. Tune in again next week for another Hot Seat. I've been your host, Hongbin Jeong.
This is Money FM 89.3, Singapore's first and only business and personal finance station.